This is going to be more of a concept video. It's not about a specific trade per se, but it's about setting up your charts in your mind really to be ready to pick out the things that you want to pick out of the overwhelming amount of data that's coming at you every second of the markets to kind of filter out other things and focus in on certain things so that you have the best chance of finding the best setups and taking the best trades that you possibly can and putting your hard-earned capital to work in the best possible way. I'm going to call this video Tools of the Trade, and in it I'm going to spell out a few different tools that I use every day to make my trades and I find pretty invaluable. And so let's go ahead and talk about a few of those. The first tool that I'm going to talk about is the horizontal line. In TradingView, you can find that on your lines chart area. Here it is, horizontal line. And if you star this, in other words, press this so you get the gold star, you'll then have it on your favorites panel down at the bottom. And in your favorites panel down at the bottom, you can then just click it one time and then put it on your chart. So I use this horizontal line to put my quadrant lines on my chart. In the NQ, which is what I trade, I have a line about every 25 points up the scale. And you would think that it would be 0, 25, 50, 75, 0. But no, I'm doing 0, 26, 50, 77, 0. Okay? And you're like probably wondering why 26 and 77? Why not 25 and 75? Well, I can't tell you why, but price action shows that when price gets to these levels, 26 and 77, not 25 and 75, they tend to act as very clear levels of support or resistance So that's why I use them. And you'll see that if you watch my videos for any period of time, you'll see price coming up to 26 or 77 or down to those levels and really reacting strongly to those exact levels. So that's why we have those. So what I do is I have specific colors for each level. And the way I do that is I just double click and I create a template. So I said save. I do the first one the way I like it. So like 26 will kind of be a light purple. And then this 77 will be a darker purple. 0 will be green and 50 will be black. 77 will also be a little bit darker, so I can do that with the by selecting the thickness of the line. So I select like a 3/4, almost the thickness, but not quite. And then I can make a template, so I can just say save as, and I'll call it 77. Boom, saved. So the next time I come up to an area of the chart that is new territories, like all-time highs or whatever, and I need to start making new levels with my specific types of lines, I already have the template in place. And if I come up to a level, all I have to do is let's say this is a new 77 area I'm putting in. I'll just click that line here, that horizontal line, double click it, hit 77 on my template, and boom, I've got the right, it says 77 and it's got the right thickness and the right color. Okay, so that's a quick and dirty way of getting my new lines up on the chart as price begins to enter into new territories. Okay, so these levels are important because price always tends to slow down, turn around, bounce off, bounce above, bounce below. These every 25 points, and these are the levels that it tends to make those changes at. So you want to keep your eyes on these levels at all times. Okay, so that's one set of tools. I'm going to call those horizontal levels, and you should, if you're trading NQ, I highly recommend you put those on your chart. They are very important levels for me, and I use them every single day. Okay, let's talk about the other levels that I want to show you. Okay, these are very customized levels, and they represent moving averages. Okay, moving averages, and to find these, you can go to TradingView if you're using TradingView. If you're not, I'm sure you can find it on your charting package. Indicators, metrics, and strategies, and I use something called customizable daily EMAs. And what I like about this is that they are multi-time frame capable, meaning they support multi-time frames. So in other words, if you want to have very fast updates, and sometimes you want to use very fast charts like 5 second charts, 10 second charts, whatever. You can put the indicator time frame, the original setting at 5 seconds, and then customize those levels so that it might be based on a 1 minute. For as a matter of fact, these are okay. The blue one and the gold one are both based on 1 minute moving averages. And this isn't right now. I've got this set in 8.5. My apologies to my students that see me changing this from time to time, but I just, I'm constantly tweaking things. So right now I'm using 8.5. So 8.5, I've got 12 5 second periods in a 1 minute candle, right? So 12 times 8.5 is 102. And this one is based on the 1 minute 20. So I've got 12 1 minute periods in a 1 minute candle, right? So 12 times 20 is 240. So that's how I come up with 102 and 240 on a 5 second. And the advantage is basically that I can put this chart on any time frame, be it 5 second, 10 second, 15, 30, 1 minute, 2 minute, 5 minute, 10 minute, 15, whatever. The lines will be in exactly the same place every time. Okay, because they're based on a multi-time frame and they will never change their location. So I can view the chart from a slower perspective or a faster perspective, but these lines will always be a 1 minute, 8.5, and a 1 minute 20. Even if I'm looking at a 5 second chart, if I'm looking at a 15-minute chart, it just doesn't matter. Okay, so those are those two lines. Okay, those are my nicknames for these lines are the MACD line and the signal line, and that's based on what the MACD tool is called. Okay, because I feel like they work together, but I sometimes call it my 1 minute money line. The name changes from time to time, but they're just probably the fastest lines that a ton of traders are reacting to. So if you're a short-term day trader like me, like you're operating in terms of sometimes seconds or just a minute or two or three for your trades, or maybe 5 at the most usually. Although I'm trying to make that longer, but some of the most powerful momentum, some of the strongest Momo in the market is happening when price comes up to, okay, these lines and it reacts off of them. Okay, so for example, um, well, actually, let's get into the other two lines, other two zones actually first, okay, and then we can talk about price and how they react to them. So they're the first two, and I told you how to find them. The next two are also EMAs, just like these are, but they're pairs of EMAs, all right? So it's a pair. So this is the 5 minute 7 and 9, and this is the 15 minute 7 and 9, okay? So the way you get those is you're going to go ahead and you're going to go to Ripster MTF Clouds in TradingView. So you can find that here. Just type in Ripster MTF and you'll get Ripster MTF Clouds and the multi-time frame. Okay, so that means you can set it from any time frame and it'll always be in the same spot. Okay, so the settings on this, we've got the 5 minute, 8 and 9. Okay, so on a 5 second that would be, there's, let's see, 12 times 60 periods, right? 65 second periods in a 5 minute candle. So the 60 period 8 EMA would be, excuse me, the 60, yeah, okay, the 5 minute 8 would be 400, okay. And then the 5 minute 9 is 540 on a 5 second chart. Okay, so your resolution is 5 seconds. Just use 400 and 540, and that represents the 5 minute 8 and the 5 minute 9. Okay, and then the last one would be the 15 minute, and I'm thinking that, let's see, do I have that turned on right now? Yeah. So we're talking about the 15 minute, just triple those levels. Okay, it's a 15 minute, same thing, just 3 times the levels. And right now I've got this, right now I don't have that on a multi-time frame at the moment. I have that on a 30-second time frame because it will color it for me. So, but don't really worry about this third one. This is not really that important for trading. You don't really take trades off it. It's more of just kind of so you know where you are. Like are you under or over the 15-minute period moving averages, the 8 and 9. So anyway, let's not worry about that one too much right now. I've got that a little bit customized. So it's a little bit hard to explain. But the final one that I have is related to the um, the 1 minute, and it's a zone, and it's a 1 minute 5, like it's a 1 minute like 3 to 5, and that is for after you get into a trade, kind of helps hold you into a trade. Okay, so I think the ones, I don't want to get too esoteric here and get too far off the mark, but the ones that if you only let's talk about importance of lines real quick. If you could only use a couple of horizontal lines and a couple of diagonal, EMAs, and that's all you had available to you, I would probably be my number one line horizontally would be the 77. And again, 77, no one can figure out, who I've talked to, why 77 is such. I think it is the most powerful horizontal level on the chart. Every 100 index points, you've got another 77, right? So, and price tends to go from 77 to 77. It tends to trade within 77 ranges. It tends to use it as support levels, resistance levels. Very powerful. You know, really good trades begin to start and end there. I really don't know why. It's hard for me to understand it, but I did a quick Google Gemini search about the I guess you could say the relevance of the number 77, and it just gave me three things here. It's a semi-prime number, product of two primes. It's the sum of the first 8 primes, and it's the sum of 3 consecutive squares: 4 squared, 5 squared, 6 squared. It says that it's a strong spiritual numerological signal for introspection, transformative growth, aligning your life with your deepest truth and wisdom. So I don't know, man. 77. It's just one of those things that no one can really explain it. Trading's kind of mystical sometimes. No one can really put their finger on exactly why people like certain levels more than others. But I'm telling you, 77 is the most powerful line, horizontal line on the 4. And the great part about it is it repeats itself every 100 points. So if you missed it this time, look for it again in 100 points. It'll probably be there pretty quickly because the Nasdaq moves pretty quickly. Okay, so out of the 4 horizontals, I'm going to go with 77 as the most important, and out of the 4 diagonals or EMAs, I'm going to go with the very first one, the blue line, as the most important for entering trades. Okay, so what I kind of notice is that you can start a trade when there is a breakout of consolidation or just a strong violent move, or both, and the first retracement back to the blue line, okay, is generally the best place, one of the best places to enter any trade anytime. And if that retracement happens at an intersection of the blue line and the 77, even better. Okay, I'll give you a perfect example of that happened Friday, November 14th at about 9:42 a.m. Okay, and I'm not showing you price yet. Obviously, you don't see price on this chart. I've left it off purposefully so that you can get a sense of these tools that we use in order to more clearly see them without being distracted by price. Okay, but I'm going to put price on here for just a minute. This is going to be a 30-second chart. Okay, sometimes I use 5-second, 10, 15, 30. Those are basically the 4 that I use, depending on the time of day. As a matter of fact, when you're in the first 15 minutes of the market, the volume and the volatility is extremely high. Okay, so you are going to want to. I got some lines on here that they don't belong here. Let me take them off. You're going to use you want to use a little bit faster time chart frame in the first 10, 15 minutes of the market. So let's go with 10 seconds for right now. Let's go with 10 seconds. And let's go back to the open, New York Open. We had been selling down overnight, but we've been selling a hell of a lot on Wednesday and on Thursday and Thursday morning, or Friday morning. So I think the market was kind of ready for a bounce at that point. So, and it did bounce very hard on Friday. Okay, so let's put the candles on. Let's take a look and see what we see here. All right. So we open, we sell down, we find some support at a 26. Remember, I told you that 26, not 25, is the key area in that zone. So as you can see, it bounced to the tick right off 26 and headed straight up from there. Okay. At that point, it crossed all of the moving averages, every single one of them, and just headed north from that point. It took one or two bounces off the 77 to the tick, right? And then it headed up and to make its first contact or almost contact with our EMA, our blue EMA. Now, the fact that it didn't make full contact with it is not something you should be concerned about. In this case, it got as low as 780. The blue line at this point was at 777. Okay, so 2.5 points under, and obviously our 77 was right there as well. Okay, so you have an intersection, right? You have an intersection of three things: price, your very first blue line here, your signal, your MACD line, and the magical 77. Okay, they're all together right there. Okay, that is a buy, especially if you see a long wick and price wicking up off that area. Okay, I mean, you can try to place a limit order where you think it's going to touch, and you might get filled, and that'll be an amazing entry if you can do that, especially with a super tight stop. And that is a strategy you can take. You can say, hey, it's coming down to an intersection of 77. I'll put a limit order in about 5 points up, about 81, 82, and with a stop maybe 10 points under that, and we'll see. Maybe just a few micros. What am I risking? $50, $100? Really doesn't matter. Like that's not going to kill me if I lose $50, right? Or even 100. And then look at the reward that you can get off that. So that is a strategy. It's not the strategy that I usually take though. Usually, what I want to see is a reaction. I want to see a price bouncing, reacting, putting in hammers, giving me, if I'm using Heikin Aisha candles, super fast Heikin Aisha candles, which I do sometimes. Let's scroll back over there and see how that looked. 5-second Heikin Aisha candles are averaging candles. They average the existing plus the one behind it to get to smooth the price action, just the way an EMA averages candles to smooth the price action. So that way you can kind of see where the pivots are. You can see where the turns are a little bit more accurately, and nothing's 100%, but it kind of shows you the turn happening, the pivot happening. And if you've got your eyes focused on a very specific level, like for example, we're talking about this level of the intersection between the first blue line and the 77 and using Heikin Aisha, well, you can see that's where color change. And the candles will get small, you'll see a doji, and then you'll start to see the flat bottom green candles, which mean that price is moving up from its opening price directly up, never even entertaining a lower price than the price that opened at. So that is another way of saying, okay, yeah, I think this area, I know this area is going to be important because the blue line's important and the 77 is really important. Okay, I know that that's an important area. I see that we've got a color change here. I see it changing from red to green, and that makes me comfortable doing an entry, somewhere in here. So you can do all that. There's lots of ways to look at how to make a decision about a specific point of interest and your willingness to take a chance on a buy. Keep a reasonable stop. Don't be unreasonably stingy with the amount of money that you're willing to risk on a trade. I know risk management's important, but if you're using prop firms and you've got a $20 account or something like that, I mean, hey, if you risk half of it, you're risking $10, right? So you can say, hey, I'll put $1,000. I'll risk $1,000 on this. I love this level. You know, I'm only going to take one trade this morning. This is going to be it. You know, you can tell yourself that. I waited all morning for this specific setup with a blue and a purple, you know, blue line. I had a 77, price coming down into it, and I'll take one trade today. And I'll make it, I'll risk $1,000 on my prop firm money, which is basically worth $10 to me. And let's see what happens, you know. So you could put two minis with a 25-point stop. For that would be $1,000. Um, or you could take, you know, there's any combination of things you could do. It's unlimited basically, but this is the kind of thing you want to look for, the very creme de la creme of setups when you're trading. You know, don't waste your money on stuff that's kind of suspect, or just because you're trigger happy or you're bored or you got trader's itch. No, wait for the ideal setup, the A plus setup. And I'm telling you, this is an A plus setup when you have the first touch of your 1 minute money line and it's lined up with a 77. I mean, it's almost 100% guaranteed that thing's going to make you money. Okay, so as you can see, the price went 100 points in almost blink of an eye. Okay, and by the way, these 1 minute 5 clouds I have up here, they help support price too. So if price is bouncing around a little bit, don't get nervous. This is actual additional support. Okay, that's a 1 minute 5 right there, a 4 and 5 cloud. Okay, so that could be a trade right there for you. Um, you wouldn't need any more than that if you took this trade. For example, let's say you bought a couple of minis. All right, let's say you're up a few points and you take one off and you move your stop to under break even, so that you got a risk-free trade, and now you're trading one mini and you take it up for 75 points. That's $1,500 on one lot, and the other one is whatever you got. Like 5 points on one mini would be about $50, or 100. Actually, it'd be about it'd be actually be about $100. All right, so that'd be a $1,600 trade, like pretty easy. So, if you need $2,500 to pass your challenge, actually, some of the prop firms really screw you because they force you to have a consistency rule. You can't make more than 40% in any one given trading day of your target, or 50%. So you have to, it gets to the point where you have to like cut your trades off early just because they're making too much money too fast. So that kind of sucks. But if you're not trading a prop firm, just go ahead and make your money and don't worry about it. So that would be a trade that I would seriously consider, and I would target the 77, maybe a little under it. But as you can see, that's where it hit resistance. Okay, and those are some tools of the trade. Okay, tools of the trade are your levels. Your levels can be horizontal, they can be diagonal. I'm talking about putting levels down on zero, double zeros, 26, 50, 77. Every single 100 points, you've got these on your chart. And I'm also talking about levels where you've got the blue line, which is the 1 minute 8.5, the gold line, which is the gold line is the 1 minute 20, and then the first trading cloud or zone would be the 5 minute 8 and 9, and then the second one would be the 15 minute 8 and 9. Okay, so that's kind of what I'm recommending to everybody to have on their charts, and then just take trades based on lots of other things that I'll be teaching. But essentially, when you have an intersection of some of these, it's stronger, but you don't even need an intersection. For example, I highly recommend, if you have a breakout and if you are heavily consolidated and then you have a breakout and then you have a back test up to the blue line, okay, take it. Take it. This one happened in the last hour, beginning the last hour of the market. That's a time when volatility comes back in, just after 3 p.m. New York. So here's one at 3:10. Okay, we had consolidation, a breakout, back testing of the blue line and the gold, by the way, both, and a continuation down. Okay, and then you can ride the blue line down 100 points. That's a good trade. You also had at the time of the morning, earlier in the morning, if you're up early, say 5:30, 6 o'clock in the morning on Friday morning, you had a trade here where price was heavily consolidated. Okay, right here, you had all of your lines within a 5-point range here. There was a breakout here, a breakout, a back test of your blue line, which is your 1 minute, 8.5, right? Rejection, and ride that blue line down. Here's a 25, 50, 75, 100 points, 125 points. So yeah, and just like if you just want to like target the next 77 down, that's always a good one. But you know, I'm telling you, you can choose how you want to manage your trades. But notice also how the 1 minute 5 kind of held you in. When you were nervous, when price wasn't going down as much anymore, you could kind of eye that 1 minute 5, okay, cloud, okay, and say, hey, you know, I'll let that hold me in. If it breaks through that, maybe I'll kill the trade. But it's holding me in. You know, you can see that that faint glow of that 5 kind of just holding you in, right? Holding you in, right? Holding you in, even holding you in down here, right? So these are trades, these are tools of the trade, all right? Your horizontal lines, your moving averages, they show you the best spots to get in. As you can see here, we had a confluence of the 50 and the blue line, right? The 1 minute money line. That was a combination, that was an intersection of the two, both providing resistance to price, which allowed price to roll over. Okay, that was in the morning, and then in the last one, let's take a look and see if that was an intersection as well. That one was not. Well, I mean, it was a little bit under 26, but it was kind of at a confluence of a few lines. It was actually, if you look carefully, you'll see that it actually was being held down a little bit by that 5 minute as well, that cloud. But primarily, you can see that the body on this 15-second chart was being contained by the blue line, and the wick was almost being contained by the gold. But you know, wait till you get a confirmation of a rollover in the form of a red candle. You know, this could be in a 15-second chart, a 10-second chart. Let's see what it looked like there. You can use any chart, really, any fast time frame. Just learn the peculiarities and the specifics of that particular time frame and work with that, and figure out which time frame works best with which time of day, you know. So here's what it looks like on a 10. You can see it's clearly rolled over there at these levels of resistance and confluence. You know, take your pick, but keep it tight. You know, some people use tick charts also. Some people use Heiken Aishi. You know, there's a variety of things you can do as far as which exact candle you're going to put. But regardless of the type of candle that you're using, what's the most important is the fact that the turn, that the resistance is occurring at the specific levels themselves. Okay, so keep these levels front and center in your mind, on your charts. The blue line, the gold line, these clouds, and use them, especially the blue line and especially the 77. I keep saying this over and over till I'm blue in the face. Okay, you're going to get some of your very, 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 very best trades. Okay, at a confluence of this fast 1 minute money line and the 77. Okay, that's where you're going to see price pull back after a breakout and really rock it. In this case, it pretty much rocketed up a couple hundred points from that point. Okay, with one pullback here against what? The blue line. All right, so tools of the trade, use them, profit from them. Hope this helps. Have a good one.